Welcome back. After a little bit of time, now I am talking about the analysis one more time. We know the risk disclosures. I'm not getting into the details here, but please prepare. It's your money. Put that wisely. Don't waste it without thinking. So let me quickly, without getting into too much of other things, let me quickly get into some of the recent blogs that we had posted on first 8th of January. We had said that it has broken the range, and we expect a directional move. On 4th of February, we asked a question to ourselves: are we starting a major correction? So let me look at what charts did actually. Let me just go to the similar one here. This is where we had said expect a directional move all the way from 10,500. It has gone up to 11,170, and that was the number that we had said here, not here, here. Expect 11,000 plus. So it gave above 11,000, and then from here on the 2nd of February, we have seen a break from 10,700 to 10,200, another 500 points. Don't you think it's an excellent way to look at the markets? If you want to look at it, I already have videos which talk about supply and demand. Gives you very nice way to look at the world. Now, I want to talk about this blog, which is about the, oops, not this one, but the other one. Just give me 1 second. Sorry for this. And rather than spending a lot of time on charts this time, I want to keep it short. So I'm going to be looking at the blog itself and then taking you there from there. It looks like my network doesn't want to help me here. So while we are looking at that, just look at this supply demand on daily. If you look at it, we had created a new supply here on 2nd of February, and then we said this is the first demand level between 10,400 change to about 10,500 level. And on 6th of February, we broke that by opening way below and then recovered more than 300 points. We tried to get away. We actually showed on the 15th of February that we are going to honor this demand zone and probably go up, but immediately next day it failed to take the top of that day and showed another mini correction. But then there are three candles which have whole body below our demand zone. So I expect the next move to be a downward move from here. On the weekly chart, if I look at it, this is a very long support line here, and this, if it has to come in next 4 weeks, it needs to give a good support around 9,500. And you probably know already 9,000, 9,500, 10,000. These are the major levels, and on those major levels we see a lot of emotions. So I expect this to also act as a good demand zone. So if I go short now at these levels, around these levels, my first target is around 10,100, 10,000 I would say, and then next target is about 9,500, giving me very nice risk to reward at these levels. Right? I'm not sure. But my risk reward will save me from here. This is the daily clouds. If you really look at it, we have broken the daily clouds on 22nd, and then we are trying to go past. We are going to try and see if we could test these levels and go up. The future cloud has already turned red. Please keep watch on this. So I expect this cloud not getting broken up, but rather the correction to continue and go down either to 10,000 levels or possibly to 9,500 levels. We also want to look at the options data. If you remember, by expiration dates, last time when we saw, most of the times except for the June series, we had more put writings, and the put call ratio was less than 1. But now these things have started coming to normalcy. Also, I see that in the month of March, let me just go to strike and go to March. Month of March expiry, normalcy have been showing the levels which were there for 8,500, 600, and 700 still there, but then you have seen a good enough put writing around those levels. These are calls being written. If you want, you could look at the last post on my blog post which talked about these levels, and I was a little concerned about these levels, and I thought that these are writers which will get the markets to come down. They, even if they are writers, they have made good money, more than 1,000 points, so they should be happy. But then now there are lots of put writers which are coming in, especially at 10,000 levels, at 10,400 levels. And with this, I believe we are not going to be seeing a major cut. I would go with a target of 10,000, which seems to be a little more conservative target for me. If I look at the June expiry, this is an interesting place where I want you to focus on. Here, you have seen a lot of put writing at 9,700 levels and 10,200 levels. This makes me think whether they are buyers or sellers. If they were buyers, then these are the people who are expecting markets to crash and now buying these very very cheap puts at 60, 70, 80, 90, 100 levels to make thousands of points from here on. If they are the writers, on the other side, they would be looking at getting those few hundred points at the max over a period of 4, 5, 6 months. I don't think it would be the writers, because writers take unlimited risk, and if I have to write, I would rather write 9,700 March put, than to writing so far in the time zone and letting my risks go on for next 4 5 months especially. So net I believe we still in the downturn, especially looking at these put buyers out here for the June series. But then let's see how it really spawns out. I'm not looking at a major correction at this point in time, but the markets are going to be showing us what they have to show. So I'm done. If you like it, please like it, subscribe to my channel. Thanks a lot. Happy trading.